All right. Hey, and welcome. I'm Andy Snyder. I'm the founder of Manward Press. And thank goodness we've made it to the end of April. We all survived. The economy's sort of still going. But the question on everybody's mind right now with investments is what's next? What's doing well? What's not? And what do we do about it? So I want to take a look back at April and talk about the biggest winner in the stock market for the last month. And that stock is Apache, an oil stock. Ticker symbol APA. It started the month at $3 and about 89 cents a share and went over the $12 mark earlier this week. So big move, about 200%. So why? Why is oil one of the hardest hit assets in all this, propelling the stock to be one of the strongest of the month? And really the story in the oil patch is, of course, oil everywhere, not a drop to sell. We saw prices go negative in mid-April, kind of a non-story, mathematical anomalies, some supply demand issues, but really the story, with Apache, they have earnings coming out on May 6th. And the story here is that for the first quarter of the year, they're looking at oil prices on average of about $45. For the month, they're averaging somewhere, about $15 or so. And so that's about a third of where they were in the first quarter. So that's why we saw that big plunge. What investors really want to look at now is where oil price is going to go. BP just came out recently and said they expect demand for oil across the globe to be down 16 million barrels per day. And just for some context, before this crisis, we're using about 100 million barrels per day. So we're down about roughly 16% if you believe BP's numbers. There's a lot of folks that are saying the numbers could be even worse. So with Apache, we have the oil demand issue. We certainly don't have a supply issue. And so that's really what investors need to look at here is short term. We had these big pops, lots of volatility, but what about long term? The stock market really likes to look out long term. And from that standpoint, Apache has some pretty good reserves. It just announced in mid-April that it found another big reserve off the coast of Suriname, off of South America. But right now, that's like finding, going in the woods and finding a barn full of buggy whips. What good is it? Maybe it'll be good in the future. Maybe all this oil they just found will be good in the future. We don't know. And that's where the volatility is going to come in. For my money, I'm not buying Apache yet. I think we're seeing the bounce off the bottom. News could get worse. Now we could get into solvency issues. The company has a lot of debt. Of course, has payroll. Can't just shut everything down and have all that debt go away. So the oil companies are making big headlines. They're bouncing around. Short-term traders have some big opportunities. Anybody long-term, I'd stay away from Apache. I'd stay away from the oil patch in general. So that's my take. I'd rather have the buggy whips right now than the oil stocks for sure. If you want more commentary like that, I have a free daily digest called Manward Digest. The link to sign up for it is below, so check that out. And I'll talk to you next time.